Other than the regular trading hours, which is from 9:15 a.m. to 3:30 p.m., we also have a pre-open session and a post-close session on the NSE exchange. The pre-open session happens from 9 a.m. to 9:15 a.m. and the post-close session happens from 3:40 p.m. to 4 o'clock. Let us understand what happens during the pre-market. During the pre-market, the buyers and sellers are placing their orders to buy and sell. Let's assume there is a buyer who wants to buy one share at 54 rupees, which means at 54 rupees, the total number of cumulative shares to be bought is 1. Another buyer wants to buy two shares at 53. So the buyer who was willing to buy at 54 will definitely be happy buying at a cheaper price, which makes the cumulative at 53 as 2 plus 1, which would be 3. Another buyer wants to buy 3 shares at 52 rupees. So the buyer who wanted to buy at 53 will be happy buying 1 rupee cheaper, and the buyer who wanted to buy at 54 will definitely be happy buying 2 rupees cheaper, which makes the cumulative as 3 plus 2 plus 1, which will be 6 shares. Similarly, we have another buyer who wants to buy 4 shares at 51, which makes the cumulative as 10, and we have another buyer at 50 who wants to buy 5 shares, and the cumulative will be 15 now. Similarly, we'll also be having sellers on the sell side. The very first seller says I want to sell 1 share at 50 rupees, which makes my cumulative as 1. The next seller says I want to sell 2 shares at 51. Therefore, the person who is at 50 will be happy selling at an expensive price, which will make my cumulative at 51 as 3. The next seller says I want to sell 3 shares at 52. Now the seller at 51 will be happy selling 1 rupee expensive. The seller at 50 will be happy selling 2 rupee expensive, which will make the cumulative as 3 plus 2 plus 1, which is 6. Similarly, a seller at 53 wants to sell 4 shares, making the cumulative as 10. And a seller at 54 wants to sell 5 shares, making the cumulative as 15. So this is what happens during the pre-market. The market is accepting your buy orders and sell orders. Once all the orders in the system, this is what happens. Let's assume that the market opens at 54. If the market opens at 54, we have cumulatively 1 share to be bought and 15 shares to be sold. So even though the potential is to have a transaction of 15 shares, but because on the buy side there is just one person who is willing to buy 1 share, the maximum number of shares which will be traded will be 1. Similarly, if the prices they open at 50, 15 shares can be bought, but only 1 share is available for selling, which means the number of shares exchanging hands at 50 will again be 1. But assuming if the market opens at 52, the maximum number of shares will be exchanging hands, which is 6, because there are 6 shares to be bought and 6 shares to be sold. So this is what happens during the pre-market. In the pre-market, the computer or the algorithm tries to identify a price point at which maximum number of shares will be exchanging hand, which becomes as your opening price for the day. Now, when this matching is happening during the pre-market, there can be 4 different cases. Let's look at the very first case where we have no matched quantity. If there is no price discovery in the pre-open session, the price for the first trade in the normal market shall be the opening price. So what happens is, in this case, you can see the cumulative quantity is 19 at 50 rupees 0.55 paise to be bought, and at the same price we don't have any sellers. The sellers are at an expensive price, which is 50 rupees 0.60 paise. Because the buyers and sellers are not matching, no transaction will happen during the pre-market, and the very first transaction which happens after 9:15 will be considered as the opening price. Let's look at case 2, where we do have a single matched quantity. So this will be the indicative equilibrium or opening price at which maximum quantity can be traded. In this example, you can see that during the pre-market, we have 19 shares to be bought at 50 rupees 0.55 paise, and on the sell side, we have 38 shares to be sold, which means 19 shares can exchange hands at this price, which will be the highest quantity during the pre-market. Therefore, the transaction will happen at 50.55, and that is your equilibrium price or your opening price. The third case can be 2 matching points with unique imbalance. If there is more than one price point with same matchable quantity, then the indicative equilibrium or opening price will be the price at which the imbalance quantity is minimum. Like in this example, you can see that at 50 rupees 50 paise, 57 shares to be bought, and 50 rupees 55 paise, 39 shares to be bought. If you look on the sell side, at 50 rupees 50 paise, 39 shares to be sold, and at 50 rupees 55 paise, 77 shares to be sold, which means at both the prices 39 shares can be traded. Now, because we have 2 price point at which the quantity is matching, the leftover quantity is considered to find the equilibrium price. You can see at 50 rupees 50 paise we will be having pending 18 shares, but at 50 rupees 55 paise the number of pending shares will be 38. Therefore, the one which has the least number, which in this case is 50 rupees 50 paise, will be considered as your equilibrium price or your opening price. And the last case is when you have two matching points with same imbalance at 2 points. If there is more than one price point with same matchable quantity and the same imbalance quantity, then the indicative equilibrium or opening price will be the price which is nearer to the previous day's closing. Like in this example, you can see at 50 rupees 55 paise we have 54 shares to be bought, and at 50 rupees 60 paise we have 36 shares to be sold. Similarly, on the sell side, we have 36 shares to be sold at 50 rupees 55 paise and 54 shares to be sold at 50 rupees 60 paise, which means my matched quantity is 36 at both the price points. And if you also look at the imbalance, we have 18 shares in both the cases. Now, assuming that the previous day closing was 50 rupees 70 paise, because 50 rupees 60 paise is closer to 50 rupees 70, 50 rupees 60 will be considered as the equilibrium price or your opening price for that script. Just like the pre-open, we also have a post-close session which happens from 3:40 p.m. to 4 o'clock. Only market orders are allowed during this session. Trades will take place at one single price, which is the closing price of the security. Special terms, stop losses and disclosed quantity orders are not allowed. Trades will be considered as normal market hour trades. The post-close session facility is available to all the securities which are eligible for trading in normal market segment. However, if security is not traded in the normal market session, it will not be allowed to participate in the closing session.